Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, July 25th, 2023. I am Frank Ochoa, aka PivotBoss. Good morning, everyone. Here's a look at the daily time frame of the ES. Right now, you'll notice the ES trading within a narrow range ahead of the RTH Open, just 13.5 points of range here heading into the RTH Open. That's 36% of average range. So just 13.5 points here in this little range right there. You'll notice that this range is inside or almost inside the previous session's range. It went just above the high a little bit and fell back in. And then if you bring it back this way, we've been in this narrow range for multiple days now, and you can even add a couple of days this way. So if you look at these 8 days here, you have this projection down here. That's 56% of average, and that tells us right there that there's quite a bit of energy built up here, and very soon we're about to see a big release of energy. How big? Well, if we get a breakout from this 8-day range here, say Wednesday on the FOMC statement and rate decision, then we could be looking at a push that takes us to about the upper portion of this range. 178.5 points would be that upper dot. So somewhere between 180 and 200 points of range could be seen over the next 8 sessions should a breakout from this 8-day range occur. Now, given the uptrending price action, typically speaking, we'd look for a downside break. That downside break could fail, you get a strong low, and from that strong low you can then project higher about 180 points, and that'll give us a good strong target up ahead. So that's something that we'll be looking for here early on once we start seeing a breakout attempt or expansion attempt out of this range. If it's to the downside first, it could be an opportunity to trap and return to the upside. Very similar to a couple of weeks ago where we had this narrow range. We were looking for a failure through the previous week's low for an outside week up. Could be very similar here as we move forward. If we take a look here at the NQ, right now the NQ showing narrow range of price action as well, just 80 points of range. That's 35% of average. The last couple of days super narrow, 3-day range super narrow. We do have a 1-day pullback here. That was a Thursday pullback, and now holding right there at the bottom of this pullback inside the bullish Pima trigger zone. And so far this market has been super bullish. What we're looking for here is, ideally, given the compression that we saw in the previous session, a great digestive day. Do we get an outside day today? Is it an outside day down? Is it an outside day up? Or both directions? If we come up here to the upper end of the range, the anticipation may be for an outside day down initially, so target the opposite side of the range, but then we could be looking at a fade right back up as this thing trades in this narrow range heading into Wednesday's Fed day. So we could be a 2-day, 3-day narrow range here for the NQ, but eventually a breakout from this range here, yesterday's digestive range, could be huge. Could be a sneaky breakout that leads to quite the move higher. Given the uptrending price action again, I'd be looking for a downside break or push that would then fail, and from that low we could be looking at a nice upside rotation ahead. That upside rotation could be about 800 to 1,000 points. That's been about what we've seen here lately. All right, let's take a look here at crude oil. Now, crude oil has gotten a nice upside break from that 8-day narrow range that we saw here before. That 8-day narrow range finished on Friday here near the highs, just below the 200-day moving average, and here on a Monday we got a massive break through the 77s, and it was able to maintain the gains for the day, closing right around 79. So a massive continuation, no failure. Had this thing broken out and then failed back below 77s, that could have been a massive higher high failure that leads to weakness. Instead, we saw a continuation and the ability to hold and maintain those gains into the close. So right now any pullback could be bought for a continuation higher. We mentioned before, this 8-day range right here has about 7 points of energy. So to break through 77 plus 7 gives us 84. We could be looking at a continuation toward 84 as we mentioned before, 83.52 is the top of the range. 80.5 is the previous year's close, and breaking through 77 here opens up a move to both of those targets up ahead. All right, taking a look now at gold futures. Gold has seen a bit of a failed high here and a steady continuation lower over the last several days. Lower highs, lower lows day over day. This market is still holding above the 1940 level after the squeeze. So theoretically, this can come up here, pull back, hold 1940, and still get a continuation higher. So while this is pulling back here, we'll want to see how price responds to 1940. Failure at 1940, and you're back toward lows up ahead. So right now, inside this narrow range, this range right here, 1, 2, 3, 4, 5, 6, 7, 8, and a 9-day developing here will increase this by 1 day. And you'll see here 65.2% of average, so not quite below 65, so you're not seeing a magenta colored bar here, but it is a compression range. It is right there at 65%. And really you're looking at this range right here. So there's some energy built up in this range, and soon we could be looking at a breakout here. If we go just to about average, that's 60 points. If we go up here toward the 125%, you're looking closer to 80. So 60 to 80 points of range could be ahead upon a breakout from this 9-day range down the road. Again, all eyes on the Fed here Wednesday. Lastly, taking a look at the YM. The YM here has been super strong, very, very strong, and it recently all began here at the beginning of June, because at that moment here, prices were below the previous year's close. So the YM was negative for the year here. It went bid right there in the first week of June, held and continued, built this range out. That bounced off of 33.8, launched this thing to new highs, now sitting at 35.5. Big time continuation to the upside has been seen since then, and you can see really this thing has just continued to stretch. We had this 4-day narrow range right here that saw a massive breakout to the upside. Initially I was looking for a failure here to bring us back down within the range, and instead we got the breakout. So from that breakout, the continuation to the upside could take us toward 36K up above. So this thing's still working its way higher. Any pullback, even if it's a 1-day pullback, could still be a buying opportunity until proven otherwise. And really, it's that 34.8 level right here. We could drop as deep as that, and bulls could still defend it for a continuation higher. A break at 34.8, and you open up 33.8 down below. So right now, YM looking very bullish at the moment. Pullbacks could be bought until proven otherwise. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.